All right. Welcome back, everybody. We're doing another deep dive today.
Yeah.
And we're going to go into something that's been kind of picking up steam
Yeah.
lately. It's this idea of a short basket.
Mm-hmm.
The theory that there's all these stocks out there that are seemingly moving together, and they're all shorted
Yeah.
by the same institutions.
Yeah.
And what's really interesting to us, of course, is the implication for GameStop.
Right. Oh, well, yeah. And it's not just
Yeah.
GameStop. Right. You have to think about the systemic risk here, too.
Yeah.
We'll get to that. I think the first thing to really look at is this idea
Yeah.
of coordinated price movement. Is there really a short basket?
Right, because if it's just a bunch of retail investors and
Yeah.
meme stocks, then there's no basket to squeeze.
Right. Exactly. Yeah. So that's a great place to start. And there's this one research piece that looked at
Okay.
meme stocks like your GameStop and AMC versus a control group,
Okay.
which were, we'll call them boomer stocks for now. And they found significant correlation only between the meme stocks
Okay.
and only after January 2021.
Wow. So are the charts,
Yeah.
do they look very similar?
They look eerily similar. Take GameStop and AMC, for example. Their trading volume's vastly different,
Right.
yet their price movements look almost identical.
Wow.
Well,
Yeah.
Oh,
Okay, so you got that, and you got the fact that it's not just retail investors driving this.
right.
So who is it? This is where the total return swaps come in.
Yeah, these complex financial instruments that allow institutions to bet on stock performance without actually owning the shares.
So it's like betting on a horse race, but you don't own a horse.
Exactly. And they can use them to avoid disclosure requirements.
Wow. So they can short a stock and nobody even knows.
Potentially, yeah. Yeah, this lack of transparency can be really dangerous
Yeah.
because you don't know what's happening in the market. And we saw this play out with our JGOs, right? Collapsed under a mountain of leverage, a lot of which was tied up in total return swaps.
Right. And there's this speculation that some of those swaps might have been tied up in
Right, we don't know for sure, but
GameStop.
it begs the question, if they were hiding it back then,
Yeah.
are they still doing it now?
So we got potential hidden short positions. We got price movements that can't be explained by just retail alone. Where does this IWM come in?
So the IWM, the iShares Russell 2000 ETF, both GameStop and AMC are heavily weighted in this ETF. And what's interesting is right before GameStop's price started this steady climb in mid-May 2021,
Okay.
there was a massive spike in IWM's failed to deliver shares, or FTDs.
Okay, so FTDs, just for anybody who doesn't know,
Yeah.
that's basically an IOU for a share.
Exactly. And a sudden surge in FTDs can be a red flag that
Right.
someone is selling shares they don't actually have.
No.
A classic sign of potential naked short selling.
And this happened right before GameStop.
Right before GameStop's price started to rise.
So are they manipulating the ETF to push down
Potentially, yeah.
GameStop's price?
And the research shows a high correlation between the value of FTD fails
Okay.
for both GameStop and AMC with the IWM ETF.
But KOSS,
Yeah.
KOSS, which also moves with GameStop, isn't in these same ETFs.
Well, that's the mystery,
Yeah.
right? If the ETF connection explains some of this,
Yeah.
then what's driving the share price action for those that are not in the same ETFs? It seems to suggest that there might be a bigger,
Yeah.
shadier market that we can't see driving this shared price action.
Now we're getting into conspiracy theory territory.
Well, there is this theory called the Voltron Fund hypothesis.
Wait, like Voltron?
Like Voltron, the giant robot
yeah.
from the 80s, yeah.
Okay.
So imagine a network of interconnected financial institutions
Okay.
all working together to maintain their short positions.
So like all the bad guys teamed up.
Essentially, yeah.
Yeah.
And so they shift assets and liabilities between each other, manipulate stock prices, hide their true short interest, and avoid margin calls.
So this Voltron fund, this isn't just a theory, there's actual research.
Right. There's a very detailed analysis of SEC filings
Yeah.
that have revealed suspicious patterns and connections between over 100 hedge funds and family offices that could be pointing to this type of network operating in the shadows.
Wow. So what does all of this mean for GameStop?
Well, if this short basket theory is right and this whole house of cards starts to collapse, GameStop could be positioned for a truly monumental squeeze. Imagine a scenario where one stock in this basket starts to squeeze.
It'd be like a domino effect.
Exactly, forcing short sellers to cover across
Yeah.
the board. And GameStop, as a potential linchpin in this basket, could see massive surge in buying pressure as institutions scramble to unwind their complex positions in order to cover their shorts.
So we're not just talking about a GameStop squeeze. We're talking about a short basket squeeze.
Yeah, that's the theory.
That could send shockwaves through the entire market.
Yeah, the potential implications are enormous, not just for GameStop, but for the stability of the financial system as a whole.
So we laid out this pretty wild scenario where a squeeze on this hypothetical short basket could trigger a chain reaction across the whole market.
Right.
But I think we really got to make sure we understand these total return swaps.
Yeah.
Because it feels like they're at the heart of all of this.
They are absolutely crucial piece of the puzzle.
So how do these swaps actually work?
Okay, so imagine you have two parties.
Okay.
Let's just call them hedge fund and bank.
Okay.
The hedge fund thinks that GameStop's price is going to drop.
Okay.
So they want to short it.
Right.
But they don't want to publicly disclose that position.
Don't want to spook any retail investors.
So they enter into a total return swap with the bank.
Okay.
The hedge fund promises to pay the bank any gains GameStop makes.
Okay.
Plus a little interest.
Okay.
In return, the bank agrees to cover any losses the hedge fund might incur if the stock goes up.
So the hedge fund gets to bet against GameStop without anyone knowing.
Exactly.
And the bank is happy to take the other side of the bet.
Right. But there's a catch, right? For this to work, there needs to be some kind of asset underlying the swap.
Oh.
It could be actual GameStop shares, but it could also be something more complex, more opaque, like a basket of stocks, or even a synthetic derivative tied to GameStop's performance.
Now, things are getting really murky.
Right.
Because if they're using these swaps to hide their short positions in GameStop, they could be doing it through this tangled web of interconnected entities and financial instruments.
Right. That's exactly where the Voltron fund hypothesis comes in.
Okay.
If you have a network of institutions all working together, they can shift these assets and liabilities around, making it really hard to track who's ultimately holding the bag.
So it's like a financial shell game, but with billions or trillions of dollars at stake.
Exactly. And what makes this even riskier is that these institutions are often heavily leveraged, right? They're borrowing huge sums of money to amplify their bets.
So we got potential hidden short positions in GameStop through these total return swaps. You got a network of institutions potentially colluding, and a system built on a mountain of leverage.
Right.
What could possibly go wrong?
Well, a lot can go wrong, as we saw with Archugos.
Right.
Any event that forces these institutions to suddenly deleverage or cover their short positions could trigger a cascade of selling and margin calls that ripple through the entire system.
So this is where GameStop, the meme stock that started it all, becomes the potential catalyst for the whole thing to unravel.
It certainly is a possibility.
Okay, so what are some triggers? What could actually set this whole thing in motion?
Well, it could be something as simple as GameStop continuing its transformation into a successful e-commerce company.
Okay.
Right? If they start exceeding analysts' expectations and their stock price keeps climbing, it's going to put immense pressure on those who are short.
So the shorts get squeezed as the company's fundamentals improve.
Exactly. But it could also be a more sudden catalyst, like a share recall. That would force institutions to locate and deliver the shares that they've been shorting, potentially exposing any naked short selling that's been going on.
And let's not forget retail investors.
Of course not.
I mean, they've proven that they're a force to be reckoned with.
Absolutely.
If enough of them continue to buy and hold GameStop shares, it creates a supply squeeze that makes it very difficult and expensive for the shorts to cover.
Absolutely. Retail investors have shown that they have the power to really disrupt the traditional dynamics of the market, and their collective buying power, combined with, their unwavering conviction, could be a major catalyst in all of this.
So we got this potential powder keg network of over-leveraged institutions hiding their short positions. A growing army of retail investors determined to hold the line. And a stock that's defying expectations. It's a recipe for a truly epic showdown.
It is.
But what makes GameStop's position so unique in all this? Why does it seem to be at the center of this whole storm?
That's a great question.
The
short basket theory suggests that GameStop isn't the only target. There could be dozens, if not hundreds, of other companies caught in this web of interconnected short positions.
So why GameStop? Why does it seem to be the key to this whole thing?
It's hard to say for sure, but there are a few factors that might make GameStop particularly vulnerable. and therefore a potential catalyst for a wider squeeze.
Okay, I'm all ears, laid on me.
Okay, so first there's the sheer size and duration of the short position.
Okay.
GameStop has been a target of short sellers for years.
All right.
And the short interest has remained stubbornly high.
Yeah.
Despite the company's recent turnaround efforts.
So they've doubled down.
It suggests that some very powerful players are incredibly determined to see GameStop fail.
So why are they so fixated on this one company?
Well, some speculate it's about more than just profits.
Okay.
They see GameStop as a symbol.
Okay.
A threat to the established order.
Because it represents the power of retail investors.
Exactly. GameStop's rise was fueled by a grassroots movement of individual investors who challenged the Wall Street establishment. Yeah. And that's a narrative that some institutions find very threatening.
So they're not just trying to make money, they're trying to make a statement.
Right.
They're trying to crush this symbol of retail empowerment.
That's the theory.
Okay.
And if it's true, it would make GameStop a much bigger target than just another shorted stock.
Okay.
It would make it a battleground in a much larger war for control of the market.
Okay. That's pretty intense. So massive short interest, symbolic importance. What else makes GameStop so unique in this short basket scenario? So massive short interest and this symbolic importance. What else makes GameStop so unique in this short basket scenario?
Another key factor is the incredibly high level of retail ownership.
Right.
A significant portion of GameStop shares are held by individual investors who are, by and large, long on this stock.
Right.
And not interested in selling.
Yeah, diamond hands.
Right, exactly.
Really legendary.
And this creates a very unique dynamic.
Yeah.
It means that even if some institutions need to cover, they might struggle to find enough shares available to buy.
Right.
This scarcity could drive the price up even further, potentially triggering a massive short squeeze.
So it's like a perfect storm brewing. You got the underlying fundamentals of the company improving. Right. You got this huge short interest that seems determined to hold on.
Yeah.
And a massive base of retail investors who are saying, we're not selling, you need our shares, you're going to have to pay up for them.
Exactly.
It's classic supply and demand.
It is. It is. And in this case, the supply of shares available to short sellers seems to be, shrinking by the day.
Yeah.
And this is where that idea of a gamma ramp comes into play.
Right. Remind me what a gamma ramp is.
So a gamma ramp is a situation where the price of a stock starts to rise, forcing those who are short to cover.
Okay.
As they buy shares to cover, it pushes the price up even further, forcing even more short covering and so on.
So if GameStop's price starts to climb significantly, the shorts could be forced to buy shares at increasingly higher prices.
Exactly.
Just feeding the frenzy and triggering a short squeeze.
Exactly. That's the potential scenario.
Wow.
And remember, if GameStop is indeed part of this larger short basket, a squeeze on GameStop could have a cascading effect.
It's like a domino effect.
Exactly, forcing institutions to cover across the board.
So the whole thing could unravel.
Potentially.
And GameStop would be the one to pull the thread.
It's a real possibility. And with GameStop's unique characteristics, the high short interest, the committed retail investor base, the improving fundamentals, it could be the perfect catalyst to set off this chain reaction.
Wow. This has been an absolutely wild deep dive.
It has.
We got suspiciously synchronized price movements. We got hidden short positions through these total return swaps.
Yeah.
A potential network of colluding institutions. Record-breaking activity in the reverse repo market.
It's a fascinating...
It's like this hidden world of high-stakes financial engineering.
It is,
that we got to peer into.
A very complex landscape.
Yeah. Well, my mind is kind of blown right now.
Yeah.
I mean, if this short basket theory is correct, and this whole interconnected web of shorts starts to unravel, the implications for GameStop are massive.
Yeah, the potential upside is undoubtedly enormous.
Yeah,
but
life-changing gains, potentially.
Absolutely, but it's crucial for investors to understand the risks involved.
Right.
This is not your typical investment scenario.
Yeah.
We're talking about a highly speculative situation.
Right, so do your own research.
Exactly.
Don't invest more than you can afford to lose.
Absolutely.
All the usual disclaimers.
But if you're comfortable with the risk and you believe in the underlying thesis, the potential rewards could be extraordinary.
It's a high-stakes game, for sure.
It is.
But for those who've been following this GameStop saga from the beginning, this short basket theory offers a glimpse into a potential future that is both exciting and a little bit terrifying.
It's a story that's still being written, and how it all plays out remains to be seen.
Yeah.
But one thing is certain.
Yeah.
It's a story that's captivating the financial world.
Right.
And challenging our understanding of how markets really work.
Absolutely. Well, this has been a mind-bending deep dive.
It has.
I really appreciate you breaking it all down for us.
Happy to do it. Always a fascinating topic.
All right, everyone. That's all the time we have for today. Remember to keep your eyes on the prize, do your own research, and stay tuned for more deep dives into the ever-evolving world of finance.
Absolutely.
Until next time, happy investing.